I said, if you go back to the sort of initial questions you asked me, I mean, how do we organize the firm? I mean, you can have a long-term view, but unless it's confirmed with price, it's irrelevant. So we do quite a lot of stuff where we'll say, oh, you know, we've been crapping on for the last 6 months about this. Well, it's kind of looking interesting. So if it actually breaks this level, maybe you want to have a stab at it. And so I think, you know, price to me is singularly important. Okay. The second thing that I think that I have learned over the years is that nothing is utterly linear. So when I was sitting in this policy think tank, Medley Global Advisors, for a long time, my job amongst the sort of team that I was running there was to kind of take the raw information that you got from a central banker and look at market pricing relative to that information. And central bankers are definitionally the proverbial super tanker, right? You cannot turn on a dime. It's very difficult to turn on a dime. And so they tend to be, you know, if you think of that as a long linear trade, right? They're hiking, they're easing. And what you see in markets is markets tend to be like a sine wave over that trend. They get way too bearish. They get way too bullish. And my job and the group that I ran was to kind of talk to hedge funds and real money managers and sort of say, you know, we've moved quite a long way from where the central bank thinks. So you need to be a little cautious here. And that's one thing that I would advise people. I mean, look, you know, you can see this, for example, the recovery in the economy that we've seen, right? We've seen it. We know it's happening. We know the vaccines have been coming for a while. They've started to work. And yet we've seen a lot of, and we started to actually see what was interesting in September, October of last year, we started to see these value cyclical plays start to pick up and start to work. But what was very interesting is growth also worked, right? Growth also worked. And then you start to look into why is that? How is that possible? Right. And then you realize, oh, God, PM's actually had a shed load of cash in September, October on the sideline. So no one had to make that hard decision of I'm going to sell my
one over the other
growth baby that I've loved for the last decade, you know, Apple, Amazon, Tesla, whatever, right, to allocate to another. You know, you didn't have to make the decision. The actual giveaway was a couple of weeks ago when Warren Buffett sold some Apple to buy the oil company, I think Exxon, right? And then you're like, oh shit, you haven't got any more cash, mate. So now this is when the risks start to rise. And so it's little tricks like that. So I would say, you know, nothing is ever in a straight line. It tends to waggle around. You can trade that if you're so inclined. And the second thing is really this, that you just sort of have to mentally you prepare yourself, but until it's confirmed by price, it is irrelevant, right? And don't try and jump the gun, right? Wait for pricing to come to you, set levels, set entries, set stops. You can nibble something in tiny so that you can watch the progression, and it's constantly, you know, either hitting you in the forehead going, you're wrong, you're wrong, you're too early, right? But don't do the classic kind of, oh, I'm going to stick them on the table, I'm going all in, because almost certainly you'll be wrong in that situation. It's risk management is hugely important.